Stocks have had a weird couple months as investors try to project an old paradigm and optimistic views on a shifting paradigm and optimistic views that haven't come to fruition. So we've been in a flat range for the last 6 months or so, but I really want to focus on the last 3 or 4 months since the absolute low and dissect this period and decide whether or not we really should be at this level or we should be much lower than we currently are right now and have been for the last several months. So the absolute low was hit on a day where we got hotter than expected CPI in October. I believe it was September CPI that we received in October, and the market cratered very quickly on that data, as it typically does when bad data comes in, particularly inflation data right now, and then it recovered throughout the day and ended the day higher. That was clearly a peak inflation, peak Fed, peak rates, et cetera, dynamic that was going on. And the market was then able to, go forward, price forward things and say, hey, soft landing on the table. However, we are now flat over the last 6 months and we are much higher than that level. And the soft landing, in my opinion, is becoming a lot less clear. I think it's actually not going to be a soft landing, and at best will be a medium rough landing. Just a boom, like, whoa, that wasn't super smooth, because we're already seeing signs that things aren't so good. And maybe we'll get to that later in this video. But so we hit the CPI. People think Fed is going to be less hawkish and the worst is behind us. And therefore, if the worst is behind us, we have to buy stocks because things are going to get better. So we continue to recover on that October dated receiving of a CPI data through November into December. And then we kind of flatten out. And then we get hit with, the Fed, despite the kind of cooling data, it looks like inflation has peaked and we're going to take a straight shot down in inflation. It's going to be super easy. All the Fed had to do was increase interest rates a little bit and the whole thing came down. No big deal, soft landing in the cards. Once the Fed began to say, no, we're going to stay hawkish, we're going to err on the side of over-tightening because we're not as convinced as markets are that this is going to be so easy, then the market kind of had this pullback into year-end. And I happen to be convinced that was going to be a new pullback to new lows because I believe that, the market thought the Fed was going to be easy now, and they're not being easy. So that's at least one of the 3 prongs, the prongs being the Fed, inflation, and the economy, that has busted. The Fed is continuing to be hawkish. However, that pullback only lasted until the new year. Once the new year came around, we basically stalled for a day or two and then hit a pretty strong and vicious rally. This rally was on the assumption that the Fed would cut rates, that they didn't know what they were doing. They were going to crash the economy, a recession was coming, and they were going to have to cut rates. They had to cut rates. The market was pricing it. This is a very popular understanding. And, people were trying to rip the bears' faces off and the Fed hawks' faces off and saying that they were so dumb, they were going to do something stupid and crash the economy. That was the belief of the market that caused the market to rally, soft landing, expectation of solid earnings, et cetera, plus things like seasonals, technicals, this number, all that, okay? And then we got Powell, and people decided that what Powell said for a day was dovish. I don't know what they gleaned from that. I don't have the whole speech, memorized, but I didn't think it was dovish then, okay? I try to be as objective as I can. I'm ready to change. If he said he was gonna, be favorable towards rate cuts or viewed the current level as sufficiently restrictive, I might have done something different. But it sounded to me like there was a ways to go until they think they might be sufficiently restrictive. The market rallied on Powell, and that was the peak. So what has happened now? Well, in October, we thought we had peak inflation. we thought we had peak Fed, and we thought we had soft landing. That was the low. When we thought we were at that peak, that was quite a bit lower than we are right now, and that was the low. Let's address all three of these and see if they actually ended up being true. And if they're not true, that means, in my opinion, that we should definitely be lower than where we are right now, if not lower than that level. Especially if we're gonna, kind of consider what's gonna happen over the next several months. So the first one, peak Fed. Very clear that that is not the case. The Fed has continued to move up their terminal rate. They don't want to use the term terminal rate anymore, but peak rate forecast is now, and this is beginning to be priced into the markets, 5.25 to 5.5, not 5 to 5.25. My assumption is that might even go higher because we've seen inflation reaccelerate, and that's not good. Now, the next question is, has inflation peaked? Well, if you watched yesterday's video, and this kind of jives with the market bottom on CPI, you'll remember that Jefferson talked about yesterday how he didn't want the market to, and he didn't personally feel that CPI was the accurate reflection of inflation and was the primary number that the market should, and that the Fed is considering. It's actually PCE. And when you look at PCE, you'll notice very little progress has been made on this number. Yes, it's not continuing to rise tremendously. However, that's very questionable because on the headline number year on year, that's very questionable because in January, the month-on-month PCE number was at the highest we've seen since 2021. There were a few instances where it was also 0.6% month-on-month. That was 7.2% annualized. So that is quite high. The Fed has since then hiked the projection, et cetera, being hawkish. So we're now 2 for 3, not the case based on the bottom of the market in October. The third is the question of the soft landing. And in October, the market thought this is peak toughness, soft landing in the cards. As far as I'm aware, that is not the case. We've seen all mega cap tech report either flat or declining earnings, and in many cases missing expectations, if not all cases missing expectations. Maybe with the exception of like Meta, okay, who said they expect a big time recession. They're very hard landing camp. Mega cap tech missed earnings. I saw a statistic. Over 4%, or the over 4%, like something like the S&P 500 earnings declined here. Let's pull up the actual verbatim word for word so I don't botch this very crucial point. I'm just going to read the tweet. As of last Friday, 94% of the S&P 500 had reported the blended earnings decline. Earnings decline. Pause for a second. For the past decade, we have been experiencing earnings growth. That's why we've had high multiples. That's why we're still at an above average earnings multiple for the S&P 500. The blended earnings decline is now negative 4.8%. So a decline of 4.8%. Earnings decline. That's a big, important point. That is a paradigm shift. We have higher rates, which means the risk-free rate of return is up. So that affects the price of everything that has to take risk. When the price of risk-free goes down, the spread between risk-free and risk, all else equal, widens, but you still have the same amount of risk. So that spread needs to go back to normal. That's the way it works. Don't fight me. That's the truth. That's the truth. So, you have an earnings decline. You have consumers, as we discussed yesterday, going to Walmart. That is recessionary behavior. and you're missing all three of the prongs of the October low. And we're way up here. We're up near 4,000. Old paradigm levels, soft landing levels, yield cut or rate cut levels. And we just went over how none of those things are coming to fruition. So, do what you will with that analysis. I think my point of view is quite clear at this point. And that's today's video. So until next time, until tomorrow, peace out.